Hey, it's William with Adapad Realty. It's middle of November, about 70 degrees, so a beautiful, beautiful day, just hanging out here in the backyard. I wanted to chat a little bit about interest rates. There's been some talk about rates going down lower and lower. The Fed just met at the end of October, and they lowered rates by a quarter point, which was as expected. No one's sure exactly what they're going to do for the next cycle, but here's why it might not matter as much as people think. Because in their last meeting, the Fed also said that we are going to stop buying mortgage-backed securities. And when they buy mortgage-backed securities, they inject liquidity into the market. That typically drives rates down, mortgage rates. And one could argue that that has more of an effect, more direct effect on interest rates than where they set the benchmark rate. And I don't know that that's 100%, but an argument could be made. So they are easing off of that. They're tightening the supply. They're taking money and liquidity out, which means the rates may not go down, even though they're lowering the benchmark rate. Mortgage interest rates may not go down as fast as some people are anticipating. What that means as a buyer is that don't hang on and wait for interest rates to be 5%. If you need to buy, if you need or want to enjoy the fruits of home ownership, make sure that you are qualified, that you have your budgeting in order, you know how much you can afford, and your debt to income ratios are straight, and just go ahead and proceed. Because if rates do go down, you always have the option to refinance, but don't be hanging on. The days of easy, quick money and just, making money because you bought the house, and then you bought the house this year and you sell it next year and you're going to make $30,000, $40,000. Those days probably aren't going to be around here. I think, honestly, this is an indication that the Fed thinks that maybe the 5 to 6% range is where we should be. Maybe that represents a healthy market. And I've got some data to back that up. Back in 1975, the rates were right around 9.2%. In 1980, they were like 14%. If you can believe that. In 1985, they were around 13%. In 1990, they were around 10%. In 95, they got down to 8%. They stayed that way till through 2000 and so, or something like that. Then in 2005, they went down to just under 6%. And they went down in 2015, they were about 3%, 3.9% rather. 2020, they were right around 3%, and now they're back up at 6%. So if you look over the long-term trend, that 5 to 6% range might be the sweet spot that the Fed thinks is where the healthy housing market should live. And if you look at the charts to see the home appreciation, and if you've been shopping for a home or if you're a homeowner, you see the prices have gone crazy. I think those days of being able to buy the place and then just turn around and sell it and make money, those are gone. Don't look at this as a jackpot kind of opportunity. Buy a home that fits your needs as a homeowner. You want to think about what kind of buyer you are, where you want to be at, the lifestyle that you live, and just buy based on that, just on the fundamentals of home ownership and finance. That's where your heart and your mind and your finances should live. One of the indications that maybe we're not in the healthiest market is they just recently floated the idea of doing a 50-year mortgage. That, to me, it would only work in the circumstance if you think you're going to move in the next 7 to 10 years. So you're not paying over the life of the thing anyway. And yeah, you paid a little bit more, but you're not going to pay all of that interest. The difference in the interest that you would pay would be a lot less if you expect to move. If you're not sure about that, I would stay away from that if they bring that. They also floated another idea about transferable mortgages. I'll do a little bit of research on that and dig into that and see, because that sounds interesting to me. Anyway, this is William with Adapad Realty. If you have any questions, feel free to reach out to me. I'm happy to come alongside of you and help you get from where you are to where you want to be.